Hey everyone, welcome back. If you prepare returns for self-employed clients, someone is definitely going to ask you, should I be an S-Corp? Let's talk about how to think through this question so you can have a useful conversation with your clients. First, let's clear up a common confusion. An LLC is a state-level entity structure. An S-Corp is a federal tax election. They're not mutually exclusive. Most small business S-Corps are actually LLCs that elected S-Corp tax treatment by filing Form 2553 with the IRS. So the question isn't LLC or S-Corp. The question is, should my LLC be taxed as a sole proprietorship or should it elect S-Corp status? Here's why the S-Corp status matters. When a sole proprietor or single-member LLC earns $150,000 in net profit, just an example, they pay self-employment tax on the entire amount. That's 15.3% on the first chunk and 2.9% above the Social Security wage base. Depending on the numbers, that can be $20,000 or more in self-employment tax alone. So with an S-Corp election, the owner pays themselves a reasonable salary, say $70,000, and takes the remaining $80,000 as a distribution. Payroll tax is applied to the salary, but not to the distribution. The net result can be a savings of $10,000 to $15,000 or more in payroll taxes every year. Sounds great, right? So why doesn't everyone do it? Because there are costs and complexities. The S-Corp has to run payroll, which means payroll processing fees, quarterly payroll tax filings, and W-2s. The S-Corp files its own tax return, Form 1120-S, which costs more to prepare than a Schedule C. And the IRS scrutinizes reasonable compensation. If the owner pays themselves too little salary to avoid payroll taxes, the IRS can reclassify distributions as wages and assess back taxes, penalties, and interest. The general rule of thumb, if a client's net self-employment income is consistently above $50,000 to $60,000 per year, an S-Corp election starts to make financial sense. Below that, the payroll and filing costs eat up the savings. Here's the important part for you as a preparer. This is a conversation, not a decision you make for the client. You can explain the trade-offs, run some rough numbers, and help them understand the options. But entity selection involves legal, tax, and business considerations. And if the client wants to move forward, they should work with an attorney or CPA who specializes in this area to make the election properly. Knowing enough to have this conversation is what separates a good preparer from a great one. We covered this in depth at MuseSpring. Visit MuseSpring.com to learn more. And as a quick reminder, everything on this channel is educational and provided through MuseSpring for informational purposes only. Thanks for watching, everyone. I'll see you in the next one.